Hi, I'm Lauren Taylor, Managing Director of Active Property Group. One of the most frequently asked questions we get about our pooled mortgage fund is what happens if a borrower defaults? In this video, I'll take you through our loan recovery process, but before I do, I thought I'd give a quick overview of how the pooled mortgage fund works. As the name suggests, investors' money is pooled together, then lent out to business borrowers who need short-term loans. The interest paid by the borrowers is then paid out to investors via quarterly distributions. Obviously, while it is inevitable that some loans will go into default from time to time, there's a few things that we do to minimize this risk and reduce the impact to our investors. Here's 5 things we do to reduce the risk to investors of borrower defaults. Number 1 is due diligence. Before lending any funds to any borrower, the mortgage manager, Private Mortgages Australia, conducts extensive due diligence to make sure the lending decision is sound. There's over 100 different checks and searches that are done to determine if there is likely to be any issues with the borrower. Each loan is also assessed by the members of our credit committee, who have over 50 years worth of lending experience and provide feedback on whether or not to move ahead with the loan. Number 2, higher interest. As part of our agreement with the borrower, we have a requirement that should they go into default, they are liable to pay higher interest on the loan. This means that a loan in default can actually be a positive for investors because it increases the ROI. Number 3, security. All the loans we do are secured by Australian real estate. This means that a borrower uses a property as collateral for the loan, and should a borrower go into default, we have the right to take possession of the security property and sell it in order to recover the loan amount, any interests owed, and legal fees. Number 4, conservative loan to value ratios. When we lend funds to a borrower, we don't lend more than 75% of the value of the security property, and most of the time the LVR is a lot lower than this. So if a borrower defaults and the security property needs to be liquidated, even if the property value has dropped during the loan term, there's still a good chance to recover the amount lent out to that specific borrower as well as interest owed. Number 5 is a diversified portfolio. Our pooled mortgage fund is spread across a portfolio of loans, usually around 30 different loans at any given time. This means that should any of the borrowers default, the rest will still be performing and investors will still receive a quarterly distribution. APG has paid a distribution every quarter since inception in 2015. Our portfolio is also diversified across locations, property types, and loan types. These are all the things that we consider before we even make a loan offer, so that we ultimately reduce the risk of a borrower going into default. However, on the odd occasion, this will still happen. So what happens then? Recovering funds in the event of a borrower defaulting takes time, since there's a legal process that needs to be followed. Wherever possible, we try to work with the borrower to come up with a solution that suits both them and our investors, rather than going down the legal pathway immediately. This generally means a better outcome for all involved. For example, we may negotiate for the borrower to extend their loan term at a higher interest rate, or work with them to refinance the loan. If we can't come to an agreement with the borrower, then we will commence the recovery process, which can include issuing a default notice, lodging an application for possession, valuing the property, listing the property for sale, and negotiating a sales price. This is just an example of the recovery process. However, it can depend on the situation and the state in which the proceedings are taking place. If you want to look at the process in more detail, I'll provide a link to an article on the topic in the video description. I hope this gives you a bit more of an understanding of what happens when a borrower defaults. If you've got any questions on this, then please get in touch with us at investorrelations@activepropertygroup.com.au. Thanks, and see you next time.